Alright guys, so welcome back. So today let us do a quick one because essentially it's FOMC and it's gonna be low probability until that event unfolds. Okay, so right here we're right at about equilibrium of this entire range that we are in right now, right? This is the current dealing range. So yesterday price closed above and quite far away from this down close candle right here. So this essentially made this a bullish order block. So for FOMC it's gonna get pretty animated. So what I'm expecting is if price can give me something like this, I'm gonna take it, right? So I'm looking for longs in this area right here within this order block, okay? From the high to the open to the mean of this down close candle. It could tap into this daily volume imbalance, right? But that's not important right now. So moving forward, I'm looking eventually to take this high out, right? So depending on what the FOMC results in, I'm still leaning towards this high here as my current bias. So let's break down into the 4 hours chart. So yesterday price tapped into this BC right here, alright, and made a new high, closing above the mean of this order block right here, I think. Yep. So this signals that this high is next. Okay, it's bullish right now. So this is a down close candle right here. If during London price can retrace back into this level, then I think we might get a move in AM session into the high here, and I think probably from here we are gonna retrace down. Okay, so why am I anticipating a retrace down to the daily order block? It's because from Monday to Tuesday price has been expanding higher, right? It covered a lot of ground. So on Monday open, this is the Monday open, it's about 80 points in the span of 2 days. So technically I'm expecting some form of midweek reversal before continuation, okay? Because technically you can say that price does not go up in a straight line. So it's very possible that FOMC would make a fake move up to take out this liquidity right here, right? If you don't get it during London, or maybe FOMC is gonna make a Judas swing down here, right? Whatever the case is, it does not matter to me because I will use the higher time frames for my justification, right? Because even though FOMC it's manual intervention, it usually respects the daily PD arrays, alright? And I will just work my entries from there. Okay, so expecting this is the weekly profile, I'm expecting some form of seek and destroy here, and FOMC is gonna punch it down here, and we're gonna reverse back up, right, and continuation on Thursday and Friday. Okay, that's what I'm anticipating right now. Right, it's pretty clear. So let's take a look at this. Right, so maybe London, we could see some form of retracements down if we take out this high here. Okay, during London itself. So something like this into this PD array here, the 1 hour fair value gap, right? This BC right here. I'm looking at this as a possible trade, right? But it's gonna be a short-term trade. Okay, if price can take out this high here during London session. Okay, heading down into 15 minutes. Right, it lines in nicely with that 15 minutes fair value gap right here from yesterday's PM session. Right, so as long as this is consolidating right here, it's a good sign that we're gonna get some we're gonna get a pretty nice setup during London. Right, we'll see what happens when price close here. Okay, so after that I have no hardline bias. Okay, I will wait for FOMC, right? Because during that time, okay, how do I usually navigate in FOMC? FOMC announcement starts at 2, so there will be a initial excitement going in the markets, and that would engineer up the price either higher or lower. Okay, the first move is always the false move. I want to see what happens after 2:30. Okay, so if the first move goes up, then I'll be looking for shorts. If the first move goes down, I will be looking for longs. Pretty simple. All right, I want to fade that initial excitement, because that usually is a Judas swing. So basing off of higher time frames, I'm expecting that Judas swing to be to the downside. So at 2 p.m. we're gonna drop, and then we're gonna reverse after 2:30. That's what I'm anticipating. Okay, very simple logic right here. So as you can see, the BC is also right within this order block right here. Can it retest this area? Yes, as long as it does not take out this high here. All right, that is my requirement. This BC right here, it can come into this area one more time. That will be a high resistance liquidity run on the 4-hour time frame, but if you take a look at it, it's not that much of a high resistance anyway, because it only took 2 days for the price to reach the mean threshold of this premium array. Okay, so that is what I have for ES right now. Right, so moving on to DXY. Okay, So from this swing high to this low right here, 50% is right here. All right, so it's possible that the price is going to retrace into this area and then rejects lower. This is what I'm anticipating for DXY. All right, so this move right here would give a retracement for the equities. Okay, very simple. So my bias for DXY, it's this sell side right here, and it could overextend into this bullish order block, and from there we will see what happens. Okay, moving on to Nasdaq. Right, so pretty clear for Nasdaq here. This is a swing low. Preferably I do not want Nasdaq to take out this low, and it just retraces back into this order block and continue expansion. So if that's the case, then I believe that Nasdaq it's gonna overextend because it has been way bullish, so much more bullish than the other two equities, right? So for Nasdaq, this is my anticipation. All right, it's not going to revisit this low here, and it's going to punch through the highs and into this area. So what is this area? This area is a old volume imbalance that has not been tapped into, resting on top of this swing high here. So above this level, there's going to be buy stops, and it's going to trigger the price to run into this volume imbalance right here. And what's the furthest extension I'm looking at? The mean threshold of this order block right here. Okay, I think it's about 13509. Okay, this would be the mean threshold of this order block. So I'll be looking at that level. Oops. Okay. And if you take a look at the Dow Jones, you can see how prices are closing within this area right here. So what is this area? This is a previous weekend opening gap, right? Weekly volume imbalance. It was used previously to push the price higher. So when it comes down into this area, I'm expecting this to act as support. It can wick down into this area, but I do not want to see price close below this level here, which is what we got. Price never closed below this level. Okay, it's pretty straightforward right here. So this is the consolidation, and right now we're gonna have an expansion up. So for Dow Jones, I'm expecting this high and this high heading into April. Okay, these biases are all heading into April, right? And for ES, this high here, and above this high, what do we have? We have this volume imbalance as well. Okay, so this is also targets for expansion, right? So price has been consolidating around here, and right now we're in the initial phases of expansion, and during expansion I expect price to be of low resistance. So we're gonna see very fast price movements moving forward, heading into this end of the week and heading into April until we take out this buy stops down here. Okay, so simple, very simple. So right now the previous daily CB has turned into a balanced price range. Price should not close below this balanced price range. It can come back into here, it can wick into here, it can close within here, but not below the balanced price range. Okay, that's the hardline rule. Okay, so because ES right now it's very weak as compared to Nasdaq, right? ES is very similar to Dow Jones. Okay, very weak as compared to Nasdaq, right? As you can see, Nasdaq is already approaching the highs in February, but ES is nowhere near this levels. Okay, so heading into April, I'm expecting some form of SMT whereby one of the indices fail to make a higher high. So right now my focus is this high right here, right? February's high. So if somehow or other ES made a lower high as compared to Nasdaq and then it breaks market structure like what it did right here, then I'm thinking that it's gonna run to this sell side here. Okay, very simple. So because we broke market structure in the month of March, I am gonna mark it right here. Okay, so for this expansion I'm giving up to 60 days. Okay, up to 60 days, right? And I would like to mark the 40-day mark. 60-day, okay, 60-day technically will be 1st of May. So moving forward, I just want to mark the 40-day. Oops. Okay, this will be the 40th day, and I want to mark 20th day. 20th day, it's right here. Alright, so I don't think we're gonna break down from here, so we can, but I personally don't think so, right? It all depends on FOMC, as I've mentioned before. So I'll just keep this in mind, right? I'll note down the 40th day here. So if it continues expanding higher, right? After FOMC, I'll be looking at this date right here, and somewhere around this date I will be anticipating a reversal. If it doesn't give a reversal, I'll be looking at 1st May. Very simple. Okay, 1st May. So that's the time frame I'm giving to this expansion higher. Alright, Nasdaq is similar right now. It's really close to the 20th day since this market structure shift in March, similar to ES. Alright, and I think that's it for the price anticipation and expectations moving into the month of April. So I hope you find this insightful, and if so, you can leave some comments if you find it helpful, or if you have any questions you can leave it in the comments as well, in the comment section, right? I may refer to them and I might be able to answer your question. But anything with regards to concepts, I would rather you refer to ICT himself, right? I'm just here to anticipate price, and I will answer questions regarding to anticipation, okay? Not questions regarding to concepts. All right, so there you have it. All right, and with this I'll be closing here.